notes here in the window. So let's cover some of this first. It'll put everything in context, and we'll go from there, all right? So overall, just a couple basic ideas for those of you that are just still kind of getting your bearings on what this NASDAQ rebalancing is. Again, it's aiming to do is drop that weighting from about 55% to 40, right? And the whole idea is that no stock should exceed 4.4% within the NAS. All right. The whole idea here is, does this undo the expectation that the NASDAQ is going to continue to be the outperformer for the year? So I don't want this just to be this sort of discussion of what the rebalancing is alone. I really want to get into what are the implications for us, and does this change our opinion of what's going on with the NAS? And for the most part, it really does not. Are we going to continue to see a lot of volatility? Yes. And here is why, right? Here's why in terms of the volatility. And by the way, for those of you that are wondering, is this something we need to be concerned about with the S&P 500? No, this is very much an NQ, QQQ conversation, right? Any of those futures contracts and ETFs that reflect the true weighting of the NASDAQ, which is a concentrated weighting, it's only there. S&P does not have this issue. So the question I probably get the most is which stocks are going to benefit the most. And for the most part, it's going to be this list that I have here. Everything from Starbucks to Booking to ADP, right? Those are going to be the stocks that when we go from 55% weighting to about 40, where does that 15% go? It's not going to be concentrated necessarily in just one or two names. It'll be sprinkled across a number of names, but these are the names that are largely expected to benefit the most, while Microsoft and NVIDIA are expected to be the largest reductions, okay? And then let's talk about something else, which I think is at the heart of what we're dealing with here, which is high concentration weighting. This is oftentimes something that a lot of traders are not fully aware of. So just a few things and the ramifications of this. When we talk about high concentration weighting, let's open up the QQQ. Here, I'm going to go to the layout of, here we go, the QQQ. And let's talk about what high concentration weighting is, because a lot of times a lot of traders are caught off guard by the reality of this. So high concentration weighting is when a very small number of stocks make up the majority of the weighting for an index or even a sector. And so that means that when we're looking at the real market, I think a lot of traders think that, oh, let's look at it from an equal weighted standpoint. Gang, that's not the real world. That's like taking out a ruler and saying, well, a foot is 8 inches. It's not, right? We can pretend, but at the end of the day, a foot is 12 inches. So things like equal weighted S&P, equal weighted NASDAQ, or even some alternative weighting of the indices is just an exercise in futility, because why would I want to think a foot is anything other than 12 inches, right? I hope that makes sense. So right now, Microsoft is 13%, Apple is 12%, NVIDIA is 7.5%, right? When we take a look at the top holdings. And these will shuffle around from time to time. Yes? They're not always going to be in this order. I think right now we're looking at Microsoft, Apple, NVIDIA, and then Amazon. So don't get too concerned if number 3 is number 4 or number 4 is number 3. This is pretty much how the NASDAQ looks. So just for comparison, right? And this is what high concentration weighting means. Let's go down to Costco. You see Costco down in the lower right-hand corner. Costco comes in at a whopping, if you think about the weighting, 1.56%, right? So the equal weight Costco to Microsoft at 13.07%, right? To say these things should be equally weighted makes no sense. And the reason I bring up this year to date is because if I'm an investor and I'm looking to smooth out my P&L, an equal weighted ETF or fund makes sense if the goal is to smooth out the P&L. If the goal is to mimic what's happening in the NASDAQ 100, right? We remember it's high concentration weighted. And you could see the high concentration reality is up far more than an equal weighted. So when folks ask me about equal weighted type views, I'm not a fan. I'm not a fan at all. Unless someone's saying, hey, I'm in the latter years, I'm looking at my portfolio, I'm in the latter years before retirement, I'm looking at my portfolio and I'd really like to take some of the volatility out, right? So just to kind of put that in perspective, it's a cool investment tool, but it is not what we want to do as traders. We want to remember this is the reality right there. Okay. And also, be aware that deviating from the weighting of the NASDAQ, of the S&P, of the Dow, or in any way treating it as equal weighted will not reflect on what's really happening. Now, my day traders know this, right? When we are looking for relative outperformance, say within the NASDAQ or whatever it is we're looking at, when we're looking at relative performance, it's got to be relative to the weighting, right? So if you're struggling to find, so how many folks here are saying, Rog, I'm struggling to find follow through, right? I think I'm finding really good names, but I'm struggling to find the follow through in those names. Oftentimes the culprit is looking at stocks that are not tracking with that bigger picture view. So what are the bigger picture views within the NASDAQ? So if I look at the NASDAQ, and this could be NQ or QQQ, I like to view the engine, right? Let's think of it as an engine. I also use the analogy of boats and tides, right? But let's just use the analogy of the engine, right? The cylinders, right, of that engine are XLK, XLC, XLY, and if you want to consider sort of an honorary cylinder, SMH, right? They should ideally be moving together. Now, let's use today as an example, whether you're a swing trader or whether you're a day trader. Early on in our session in the Sector Secrets Mastery, which, by the way, for those of you that are interested, this does not happen regularly. This is not an offer that's available month to month. The Sector Secrets Mastery has the $7 trial coming up. I think I should have the link for you all next week. And the trial is going to be through August. So if you want to dedicate yourself to the way in which, a lot of what I'm doing, we're going to be implementing with alerts and everything else, check it out. Set aside 2 1s and a 5. You'll get that mastery package coming up next week. Gang, I'm only mentioning this because I do not keep a trial open 12 months of the year. We do these very rarely. I'm not even sure the last time we've done one, but this will be the trial month coming up in August for 2023. Okay. So I want to make sure everyone knows if you want to give it a whirl, it's next month. And then that'll be that. Okay. Anyway, one of the things that we did this morning is that we noted that healthcare was moving higher, right? We noticed that healthcare was having a very strong day. And then we said, let's then look at healthcare and the Dow. Why? For the same reason that I'm explaining high concentration weighting at a sector and stock level kept us away from the NASDAQ, kept us from getting long the NAS. Generally a bad idea. Why? Let's talk about high concentration weighting. This is so cool, gang. Once you get this, I'm going to tell you, gang, if I'm talking to 100 traders, not 2% of them operate their trading lives with the respect and understanding of high concentration weighting. They just go trade their favorite name. They go trade, arbitrarily whatever's making a new high or a new low, rather than saying, what is the cylinder doing within the context of the engine? Yeah. XLK weak, right? This is Apple. This is Microsoft. XLY weak, right? And also XLC. Now, what are the implications for those 3 sectors moving lower? Amazon, Tesla, Meta, both the Googles, as well as Amazon, Tesla, Apple, Microsoft, both the Googles, Meta, right? Those are all going to go lower, all right? If we have to fight, right? And I did try to, and by the way, I do want to be completely forthright. There was one relative outperformer, and it still actually is doing a decent job of holding support. There was one relative outperformer today, and it was Apple. If there was a shot at the NASDAQ moving higher, Apple was the best bet, right? Not the NASDAQ, not any of the downtrending names. All right. So let's take it to what worked today. If you take a look at the Dow, we're long the Dow. Why? Because it made sense to focus on the overall strength because high concentration weighting, gang. Financials were holding and healthcare was on fire. So this is not just about the NASDAQ and the rebalancing. This is about the implications of high concentration weighting. All right. So yeah, I've got some notes here on the individual stocks, who's going to struggle the most, etc. This will be done by the close of the 21st. That means on the 24th, which is a Monday, we will have the new weighting in effect. So by the close of Friday, July 21, this should be completed with the new weighting. And then come Monday, does this undo the strength? No, gang, we still have a major high concentration weighting of those magnificent seven. So after a little bit of a pullback, which I would love to take advantage of, we actually have in the mastery a pending QQQ buy. If we get down low enough, this is something that we want to do. I would love to buy the NASDAQ if it gets down to support based on volatility. So we're still waiting for that. And if we get it, fantastic. I want to be long. I definitely want to be long, but long from lower. And why do I want lower? Well, that's where the support is, based on volatility, based on possibly, well, this trend might be a little bit wobbly, but we'll keep an eye on it. But yes, I absolutely want to stay long the NASDAQ, right? I don't want to think that this rebalancing undoes the overall strength. If you are concerned about that, you can focus in on things like the S&P because, again, high concentration weighting, the strength overall of Apple and Microsoft, financials now launching higher through the 200 from Q2 to Q3, which, by the way, this move we outlined specifically in the newsletter, Top Tier Outlook. We outlined this specifically, the move through the 200. This benefits the Dow. This benefits the S&P. We also outlined the similar movement in XLV. So let's think about high concentration weighting for the S&P, right? I'm looking at ES or SPY, and this would include SPX. I know a lot of folks like to trade that, right? What is that engine to cylinder conversation? XLK, XLF, XLV. When those are moving higher, it's almost inevitable that the S&P will as well. Really that's straightforward. Okay. All right. Let me grab a few questions here, and thank you for that. If you have any questions, let me know. And let's see here. All right. So in our training room, questions, bear with me. And I did mention semiconductors as a part of that conversation. Yeah, gang, I would love to get long semis, but we've definitely got to move a whole lot lower before that happens. Probably 151, right? I need a lot lower. Okay, so question here is on the trial. In the trial, and by the way, any of my mastery folks here in this bonus session, gang, the notes are in your master link. Yeah, the notes are in your master link, right? So any of my mastery folks here, I guess I can give y'all a sneak peek. Yeah. So So yeah, in the mastery notes, gang, to scroll on down, you'll see Thursday rebalancing. Yeah, just open that up and the notes are there. Okay. All right. So Sai asks, is the trial good for a month? It's good for the month of August. The link will be available next week. So if you catch me on Charts and Coffee every morning, Monday through Friday, 9 to 9:20 a.m., I'll have that link for you probably by Monday next week. And it will be good for the month of August. It's a package that'll be good for the month of August. You get the mastery, my trades, the layout that I use, as well as the newsletter, the top tier Outlook newsletter. So yeah, it's a whole month of an immersion of what we do in the mastery, specifically for August. All right. And I'll have that link for y'all next week. Yeah. Just want to make sure y'all know it's coming up. All right. Next up is Papillon mentions, I said the name of an equal weighted. No, Papillon, you must have just caught the tail end of that. I absolutely do not want anyone looking at equal weighted indices unless they're looking at a longer term portfolio position. From a trading perspective, we want to remember that the real world is high concentration weighted. All I was mentioning is if you're an investor, and especially if you're at the tail end of your sort of investing cycle, you're going into those retirement years, then maybe an equal weighted might make sense because it takes a lot of volatility out, but I do not recommend them. I'm not a fan. It's not really the way in which the NASDAQ is structured. Yes. Thank you for the question. Do we need the indicators to make the trial work? Hey, Bob. Yeah. So the trial comes with the layout that I use so we have a number of free tools that are available, and the trial comes with the layout that I share with members. I am not entirely sure. I mean, you will get the grab candles, the wave, Darvis 2.0, propulsion. Yeah, so I'll give you a layout. It's the foundational layout that everything I do is built upon. But no, you don't, Bob, you don't, because anything, and here's why I say you don't. I don't want this to be something where you have to have a huge investment of money. It will be an investment of time because we will definitely make it worth your while. It's a 1 month immersion. Yeah. But any setup that I send out, the bot includes an image of the chart so you can see it, right? You can start to train your eyes to the setup. And then you'll have the entry, you'll have the exit. I will teach you the trade management. One of the things that's in the mastery is a specific spreadsheet that shows you how to position size within the risk management that's allowed me to trade for 30 plus years at this point and never have blown up an account. It's just the maths. It's just the math. That's coming from an English psychology major. We focus on fixed position size, understanding risk from the perspective of never putting ourselves in a position to have a oversized risk in our account. Yeah, I'm not a believer. One of my early mentors taught me this. I'm not a believer that blowing up an account is a rite of passage, right? I'm sure a lot of you have heard me say that throughout the years. It's really a misunderstanding of risk and a misallocation of capital. So once you realize that there is a formula to it, and again, I'm a fan of fixed bet sizing, you'll see, oh, there's very much a way to position size without over position sizing, right? Which the holy grail, gang, is risk management, and position sizing is part of that. And that's a huge emphasis in the mastery. You know, it may not be the sexy thing. I know everyone's always looking for a new strategy or a new secret squiggle. That's what I call an indicator. But at the end of the day, the thing that's going to make the biggest difference is having a very strong understanding of risk based on your account size. So what we do is we teach a scalable approach. So if you're coming with a small account, medium account, a large account, Godzilla-sized account, it doesn't matter. It's not about the account size. It's about the percentage of risk, and it's about a scalable mindset. Because a lot of traders think, well, I've got to trade a certain way if my account is under 10,000. Oh, I can trade a different way if my account is between 10 and 100,000, right? I could trade an entirely different way over 100. I don't believe in that. I've traded everything from a 4-figure account to a 7-figure account. And I can tell you that the way in which I trade them is identical. What changes? The allowable number of contracts, right? That's what changes. So it's a very different approach. Scalable fixed bet, right? It's actually not even that different. It's old school, is what it is. It's very old school. Anyway, so Bob, yeah, we'll make sure you have what you need to follow along. But even more so, because the alerts company a chart, it's going to allow you to train your eyes, which I think is very, very important. Yeah, I don't want you feeling like you have to go out and get them. No, not at all. Not at all. Stick with me for the month, and then after a month, you'll realize, okay, this is or isn't for me, which is perfectly fine. That's why I like having a trial this time of year, kind of summer school, right? And then after that, you can make an educated decision about what the next step is, right? And that's the way we like to do it. All right, let's get to let's see, I'm making sure I covered all my notes. So, yeah, if Microsoft and NVIDIA are going to be some of the largest reductions, are we surprised that we could see pullbacks in both of those? Let's talk about the difference between a mean reversion in those kind of names and say just simply a daily price movement range pullback. I would be very cautious to do anything but probably a 21 exponential or even a wave entry on Microsoft and NVIDIA, although it may be valid. Remember, we still are in the window of earnings. And I thought, we might be able to talk a little bit about earnings. Are y'all up for a little talk about earnings? About the implication of earnings and the process I use for earnings? Yeah? Okay. So let's do this. First of all, if you want to understand the way that I play earnings, we've made this available over at the Countdown Trader, which is my blog. And if you go to Google and type in Countdown Trader 642 earnings, okay, you'll get this Raghee 642 earnings window. And that's one of the updates we did a couple of years back now, and how I trade earnings. Earnings are going to be an interesting overlap with the rebalance, because when you think about what's still within the window of earnings, right? You've got NVIDIA in a month, right? In 34 days. You've got Microsoft, as you can see here, in 5 days. Apple in 14 days. So all of this is going to create a little bit of a extra bit of volatility, as the Magnificent Seven are going to be reduced in their weighting, which could drive them lower. The mean reversion opportunity in those names is probably about as good as it's been in a while. Now, not everybody is going to use the same mean, meaning what the average price is, it's really up to the individual trader. I will use sometimes the mean of the anchored volume weighted average price. Some people like to use a mean that is the 21 period exponential moving average. I like to use the mean of, additionally, the 34 EMA wave, which is the 34 EMA exponential moving average on the high, the close, and on the low, right? So if there is a possibility for a mean reversion with those Magnificent Seven and earnings, it's about as good as and ever to ask yourself, all right, could we have a more sizable pullback? Because a lot of these tech trends are quite parabolic. They're very over accelerated. They're in some cases 2 times their typical session volatility, right? Which is pretty darn accelerated. So I would love to see a more meaningful pullback on these, and then engage these right on back to the upside. In fact, you'll notice I love these propulsion dots. This is an indicator you'll get with the trial package. Look at that. That's what I'm talking about. That's the 21. Actually, that's the 8 by 21 cross. That's the way we like to do moving averages. The slow is the 21. The fast is the 8. And you can see there, tag that twice before moving higher. That's one way to aggressively take advantage of a mean reversion. All right. Okay. So those are things that I would definitely keep an eye on with the culmination of the rebalancing plus the earnings window. All right. Got a couple questions here. And do I have, as far as a leap goes, if I'm going to play something like that, I'm going to go out to a weekly time frame, because it's really more of a longer term position. So I'm going to go out to more of a weekly look. And the question is a 400 strike. Yeah, so I need a pullback. I need an actual entry. So a lot of traders look at trades as targets, right? And you'll know traders who are looking at trades as targets because they're always picking some kind of out of the money option or some sort of target that's very far from current price action. And that's fine for them. I don't do that, Sai. What I will tell you is if I can get a pullback on Microsoft, and it might be simply a retest of the lows around 330, right? Or it might be a daily time frame pullback. Yes. Uh, whether or not we get to 400, it's for me less about that and more about making sure I don't overpay for the leap. And the way that I try to go about doing that is waiting for a pullback. So it would be a buy the dip. It would be some kind of buy the dip. All right. And then at that point, whatever strike you're looking at, I'll tell you, if I take a look at the volume weighted average price and I take a look at the maximum and standard deviation, these are the lines above and below. 400 is not a bad, 396 is where the upper level is, one of the upper levels. So that's not a bad level as far as a strike goes. If you're looking for an out of the money strike, I would definitely use the anchored VWAP, either maximum permissible or standard deviation. Yeah. So that's one way you can look at the outer edges of possible price movement, kind of like what we did back in here in November, right? So treat these as dynamic resistance levels. All right. Next up is curious to hear your thoughts on TSM. All right. So let's pull TSM up on the Estimize here. So TSM is 90 days out, right? The next earnings is 90 days out. That's the way I look at it, Christian. Yeah, that's the way I look at it as far as setting up for earnings. As far as the aftermath of earnings, as far as what's happening in the wake of the most recent earnings release, I am a fan of the aftermath, right? So your timing is great for the question. I'm not a fan of 1 day or 2 days before earnings putting on some kind of play. I think a lot of traders are learning that's a low probability, very binary, kind of a bet of a play. And I'm not a fan of that. So what I would say is as we're getting this gap lower in the TSM, I would like to see, well, take a look. Christian, look at my daily price movement range on the 1 hour chart. That'd be one way to play it. However, the 1 hour is in a downtrend, but the daily is really mostly still bullish. So I would say if TSM, and frankly, it already has during the opening hour of the day, but if TSM were to make it down to 97.35 to say 95.60, that would be a volatility range buy. And then we could look at the next range tomorrow and the next range day after that. So I'm fine with a volatility based buy in the aftermath of what I would view Taiwan Semi really kind of pulling back dramatically. It's more than a mean reversion. So we can look at the volatility zone. So that's what I would look at, Christian. I would look at the support of that volatility zone. All right. And you mentioned AMD. Yeah. So, kind of similarly, AMD, the closer it gets to say 110.35, it's relatively interesting. But yeah, I would want to make sure that whatever it is that I'm buying is tracking well with the actual SMH. But yeah, that's the way that I would look at that. All right. Sai, yes, if that link that I shared with you all, yeah, it walks through the way in which I trade earnings. Yes. Yes. And it's not about the day before or a few days before. I am not a fan of that approach. Yeah, I'm much more a fan of starting looking at earnings 6 to 2 weeks, right? On the shorter end before the release. It's a specific window where we would take advantage of that run or rally into earnings. Yeah, absolutely. That's the update. All right, gang. Well, thank you so much for your interest and your questions and being here for this session on the rebalancing and also the implications on earnings. I appreciate the time. I'm looking forward to seeing you all in August for our mastery trial package. Like I said, if you've been wanting to kick the tires on that, definitely make sure you set some time aside for August. I do not know when the next trial will be. We do not make these available every month. Okay, this is not something that we make available. So that's why I'm making sure everybody knows. Okay, gang, be good to each other. I'll talk with you soon.